What's up, everyone? In this video, we're going to be going over what Powell just said today that's making the market tank down. So if we look at the S&P 500 over the past couple of days, there has been a ton of buying activity. A lot of these growth stocks especially have been exploding to the upside, like Square, Tesla, DraftKings, and a lot more. But what we can see intraday right now is a lot of selling pressure. So basically the S&P 500 this morning was looking pretty awesome, but now it's tanking down, and there's a reason because of that. So as you guys probably already know, last week the Feds hiked interest rates. This is the first time they did that in more than 3 years, as we can see by this CNBC article. Basically, inflation is very high right now. The Feds have been pumping the markets nonstop over the past couple of years, and it's time to slow things down a little bit. Today, Powell had a speech. We can see on their federalreserve.gov calendar. Powell had a speech today at the National Association for Business Economics, right? And he has another speech on Wednesday at the Bank for International Settlements, the Innovation Summit for 2022. A little bit of a tongue twister there, but either way, Powell had a speech today, and basically what he said in English is, hey, inflation is a little bit too high right now, and if it doesn't slow down, we're going to make sure it slows down, which is a good thing. But of course, the market, sometimes it doesn't take that the best way. But either way, if we look more into this New York Times article, we can see Jerome Powell, the chair of the Federal Reserve, voiced worry about inflation expectations and declared the central bank ready to do what it takes to control rapid price increases. So this is a good thing. You know, like if inflation just stays too high for too long, that is very bad. Basically, it's good to have a little bit of inflation, but when it gets out of control, that's a very bad thing. And Powell basically said, hey, if it doesn't slow down soon, we're going to make sure it slows down. And one of the ways, or one of the tools that the Federal Reserve has to slow down inflation is rising interest rates. So if we see right here, Powell said there's an obvious need to move expeditiously to return to the stance of monetary policy to a more neutral level, and then to move to more restrictive levels if that is what is required to restore price stability. So he's basically just saying if inflation gets out of control, we're going to raise rates, and we might raise rates more than everyone was expecting. And then on top of that, if we go to the FOMC calendar, basically the FOMC meetings is when the Feds decide what they're going to do with rates and the economy and all that. And like I just said, we had one of those FOMC meetings last week on March 16th. That is when we saw the Feds hike rates, right? So if we go back to this calendar, the next FOMC meeting isn't until the first week of May. More specifically, it's on May 4th. So we have some time before the next meeting, and Powell's basically giving his warning now. Hey, everyone, just be aware that if inflation doesn't calm down, we're going to raise rates, maybe more than all of you guys are expecting. And the market's selling off a little bit because of this. It's not necessarily crashing, especially considering the amazing run-up that it had relative to last week. You know, if we go through some of these growth stocks, like let's say Tesla, like I said, the rate hike was on the 16th. There was a bunch of fear built into the market heading into the FOMC meeting after the rates were hiked. A lot of stocks boomed up. You know, if we look at a couple stocks that I like to talk about a lot, like DraftKings, Square, Zoom, and some other ones, you know, Square is one of the stocks that has been running up more than anything else. We can see on March 16th, Square was trading for around like $110 or so. Then it went all the way up to like $143 on Friday in after hours. And we're seeing a lot of stocks that are in similar setups. So odds are, if you're trading the market or really any growth stocks, when you look at some of these plays, like Square as an example, you have to be objective. I am someone who loves Square for the long term. I own Square. I am bullish on Square. I don't plan on selling anytime soon. It's a longer term play for me. But at the same time, it's very important to be objective. If we look over the past 5 trading days, from March 14th, Square went from like $92.70 up to highs of almost $143 on Friday. That's over a 50% increase in 5 days. So like when you see those types of swings on these multi-billion-dollar companies, it's like you have to be objective and you have to expect some sort of pullback. So I really wouldn't be surprised if we saw some of these stocks linger around or maybe just consolidate for a couple days. We're kind of seeing that pullback right now with a lot of stocks. Like if we look at my watch list right now, it's mainly red, but some of the stocks that are leading the way to the downside is, if we look at a stock like Roblox, I was just looking at that one. Like, yes, it's down 8% today, but at the same time, it went from $35.50 up to $50.20 over like the past 4 or 5 days. So, be objective when you're looking at these stocks. Like, yes, you're going to see some big red days, but it's like, keep in mind, a lot of these stocks are up like 50% over the past couple days. So keep that in mind. But all in all, it's nice that Powell is giving this warning. Of course, the market doesn't love the news right now, but it is good that Powell is giving this warning now, because if he would have came out with this update in a month or two from now, there might be a problem. So keep that in mind. Overall, just expect some consolidation over the next couple days. That's mainly what I'm seeing, especially with this Powell news, and then because stocks dropped so much. But on a different note, if we look at the, I guess you can say, heat map for the S&P 500 today, we are seeing a lot of tech stocks in the red. We have Microsoft red, Apple red, Facebook red, Google, CRM, PayPal. A lot of them are in the red, Netflix. And we're seeing most of the buying pressure today come from the energy industry, so like ExxonMobil, OXY, stuff like that. Those are the main two. And then we're also seeing some buying pressure from the defense industry, like Raytheon and Lockheed Martin, also known as like the war stocks. So if we look at like RTX, this one is booming up today. It's only up like 2.5%, but that is a pretty decent amount for a stock like Raytheon. Also, if we look at like Lockheed Martin, again, it's definitely showing some upwards movement. And even if we look at the energy industry like ExxonMobil, OXY, these are like oil stocks basically. But we're also seeing some positive movement out of like some of these uranium stocks, like the nuclear energy stocks like CCJ, UU is another one. So keep these ones on your radar. They're definitely moving up, but I'm just expecting consolidation over the next couple days. But we'll see what happens. Either way, this video is mainly meant to update everyone on what's going on with Powell and inflation and things like that, because I know it can definitely be confusing sometimes. Another tool I really want to show you guys is if you go to Google and type in Fed interest rate tool, you'll get to this page. It's like the first link by the CME group, and I'm just going to do a refresh really quickly. Basically, this shows you what the market is pricing in terms of rate hikes and all that stuff. So like if we go to the May 4th meeting, like remember this FOMC meeting is on May 4th, right? It will tell you what the market is pricing in terms of rate hikes. So in the previous meeting, it was a 25 basis point rate hike. The market right now is expecting a 75 basis point rate hike. So that's pretty big. So keep that in mind, guys. These probabilities will continue to update as they move kind of just like the markets do. So I figured I'd show that tool. Besides that, be prepared for more volatility over the next coming days. Implied volatility still pretty high across the S&P 500, and the VIX is still elevated. So the market's expecting more volatility. Besides that, if you guys learned something from this video, please consider subscribing. I post brand new videos every single day. If you liked today's video, please leave a comment down below. Besides that, thank you guys so much for watching.